This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
A very good morning. Welcome to Bazaar Morning Call. Hope you had a good Holi. From us and all the entire team, wishing you and your family a very happy Holi. I'm Nigel D'Souza, and joining me today, Rima as well as Surbi. Hi, ladies. Good morning.
Hi, good morning.
Good morning, Rima. And yes, welcome back after the long weekend. But the good news is we have another one coming up. So it's not a bad way to kickstart the week.
Oh, absolutely. 3 trading weeks sandwiched between a Holi weekend and an Easter weekend.
That's right. 72 hours. You went in for a break. You're coming back for 72 hours. And
another 72 hours.
Another 72-hour break coming up. But let's get straight to the action.
No, absolutely. Before that, just sort of, thoughts and prayers go out. The world is not a very happy place, depending on which areas you're looking at. Geopolitics is an issue. And in Russia, what the events that transpired over the weekend. So our prayers with, of course, all the people who were affected. But to get back to the market action and talk about sort of what's at hand. Remember, this is also the last trading week of FY24. And it's been quite the year. Yes, towards the end, we've got this bit of a roller coaster going on with the broader markets. But I think the takeaway from last week was that there seems to be signs of stability coming in the market, particularly the mid-cap and the small-cap universe. I'll get to that in just a bit. But, we're reacting to 2 days of bunched-up cues, but not too much has shifted. Because the US market, what has it been doing? If you're looking at Friday or Monday trade, largely consolidation, a bit of a cool off after the big rally. Though one must say that this little bit of a tick up in the yields, the US 10-year, the US 2-year, as well as a small tick up in oil prices. Remember, Brent is about 86, 87 right now. So that remains a watch point in terms of the global cues. We don't have too many macro cues coming in. Once again, we'll talk about that's going to be on Friday, and the reaction will come in next Monday. The reaction to the US PCE data. Just very quickly, so internals back here at home have been getting better. The Nifty managed to close above the 50 DMA on Friday. And as I said, mid-caps are showing some signs of stability. The VIX continues to decline. It's come down to about 12. So that trend was very much intact on Friday as well. I just want to put sort of, the fall in perspective along with the flows. Now, you can argue that the money that's coming in is because of block deals. The FPI money is what I'm talking about. But nonetheless, it is the same color, and the color is green. And look at the positive number for March. We've got almost 38,000 crores of inflow, more than 38,000 crores of inflow coming in from foreign investors after a very weak start to the calendar year. So that's good news. The fall, the correction or whatever you want to call it, the month of March, actually, the Nifty hasn't budged at all. The Nifty is up about 0.5%. For the year, the Nifty is up about 30%. So we're talking about the rounding up the fiscal, just 2% off the peak. Even on the mid-cap index, if you're looking at it, the mid-cap index in March is down all of 2%. And it's up 60% for the 1-year period. So that's not a bad stat to look at all. Down about 5% from the peak. Small caps, and that's the question, whether the small cap carnage has settled or not. Because that's where the distance from the peak is still about 10%. The small cap index is still 10% off the highs, though it's had a phenomenal year, 68, 69% of gain. So not too many people perhaps would complain. The market simply told us in the last couple of trading sessions that little bit of shakeouts can happen. I guess one more thing for me, guys, the watch point is going to be whether the IT selling is done or not, whether Accenture was this one-day reaction, it's played out, or whether that repositioning will be the starting point of this week as we get into results season.
Well, in 2 weeks, we'll have numbers which will provide, further credence to whether there is going to be a recovery or pressure. But the Nifty IT index was down 2.3% in Friday's trade. But to quickly round up all the cues then for our markets this week, last week, the Nifty ended higher. And the key point about last week is that on a week-to-date basis, it ended up 0.3% and ended very close to 21,900. But the recovery from the Wednesday intraday low, which was 21,710, stands at close to about 700 points. So last week was an extremely volatile week for our markets. The first half, there was pressure, but in the second half, there was a fair amount of rebound. In fact, you spoke about small cap. The small cap index ended with a gain of 1.4% for last week. In terms of Wall Street action, Wall Street paused yesterday, but they had clocked in a strong rally in the prior week. So in the prior week, you had the S&P, the Nasdaq gaining close to about 2%. And yesterday, Wall Street saw a bit of a breather, and most of the indices ended mildly down, 0.3%, 0.4% down. Crude prices have risen to $87 per barrel after Ukraine strikes the Russian refineries. The US 10-year bond yield too has spiked. Last week on Friday, after we got those FOMC minutes, it went down to levels of 4.2. This morning, it's risen to levels of about 4.25, 4.26. The big events, you spoke about the PCE index. That's the Personal Consumption Expenditure Index out on Friday. But on Friday, you also have a speech by Fed Chair Powell at the San Francisco Fed conference. So those two events will be important, tracked by the markets. But back home today, per se, Nigel, you've got the Nifty Financial Services expiry.
Well, that's right. On Friday's trading session, it seems that the Nifty and the Nifty Bank was going to run away, but we met some kind of resistance at higher levels. So let's track the top points that we're looking at for today. The Nifty and the Nifty Bank, well, we've seen a good bounce, but those crucial resistance levels, well, that remains elusive. The broader markets, well, they could continue outperforming because volumes could be a little bit tepid. It could be a year-end phenomena as well that plays out. So I expect the broader markets to continue to do quite well. And the financial Nifty services, well, that plays out the weekly expiry as well. So those are the top points that I'm looking at in today's trade. Well, let's tell you about the volumes. For the past week, the volumes are much lower than what we saw in the previous week. So volumes that we saw were closer around 20% lower in comparison to the previous week. And obviously, with a truncated week, you expect the cash market volumes to remain tepid even in this week. What do the FIs do? Well, as I've been mentioning all of last week, the FIs were getting aggressively net short. And from those net short levels of closer to 95,000 contracts, that's come down to around 72,000 contracts. That's the power of short covering, right? When you're not seeing any big flows coming in from the FIs, well, when they trap themselves on the short side, that's actually a blessing in disguise because it keeps the markets, at higher levels. Options data. Well, you have call writing that's coming in back. And just when you saw, you thought that the Nifty is going to run away in Friday's trading session, it U-turned from around the 22,200 odd mark. And the call writers, they believe that they've got this covered. They don't expect the Nifty to get past the 22,300 odd mark. However, on the downside, the only strike, that's going to expire on Thursday that has 1 crore shares in terms of open interest is the 22,000 put. And that has open interest of around 1 crore shares. The premium out there has come down to around 60. We're seeing a lot of writing at those levels. So let's get straight to the levels then that we're tracking on the Nifty itself. It almost U-turned from around the 22,200 odd mark. That ties in with the 20 DMA as well. So that becomes a couple of reference points that you're looking at. And on the downside, the 21,900 mark should be rather important because that's the first level. If that breaks, then you look at the 21,710. The Nifty Bank as well, for that one as well, the 47,000 mark has remained elusive and for the Nifty. So I'll be watching both these two levels. If the bulls can get the markets above these levels, then in fact, maybe we'll see a bit of a bounce that takes place. Stock that I'm tracking for the day, JSPL. The stock should be in focus. First, fundamentally, coking coal prices are down by close to around 10% in the last week or so. So that's good news. Coking coal cost cooling off, that's an input cost, so that's good. And the promoter entity has been in focus. Mr. Naveen Jindal, he's been appointed as the president of the Indian Steel Association. So that's important. The second factor is the political twist, given that it's a big political year. And there's been some political, uncertainty on this company. Mr. Jindal has joined the BJP and now he'll contest the Lok Sabha on a seat that he had won a couple of terms ago. So that's going to be important, Kurukshetra. So we'll keep an eye out on that as well. And the reason I say this is important is because the market is always uncertain in terms of what the promoter is going to do less. And that's why, in fact, you have it that it trades at a bit of a discount. So the stock that I'll be tracking today is JSPL. Let's see if we can get past those crucial resistance zones as well.
Okay, thank you very much for that. Well put. Let's get to the equity market action then. An important opinion. Mahesh Nandurkar says the Jefferies Asia Forum 2024 in Hong Kong saw participation from 18 Indian companies with approximately $300 billion in market capitalization. He says FPI level of excitement on India is high, though valuation is an issue. He says cyclicals continue to see strong demand conditions across industrial and property sectors, adds that financials are seeing moderation in margin and growth in the near term, but they're confident about the asset quality. Mahesh adds, consumer commentary is mixed, and they say stay overweight on cyclicals like property, industrials, power, banks, and telecom.
All right, that's the Jefferies call on the equity side. Let's get you some money market views as well. Abhishek Goenka of India FX and Asset Management says the rupee weakened last week but has recovered from lows as the yuan turned around on Monday. He does not see a runaway depreciation in the rupee, and with forex reserves now at an all-time high, he believes the RBI will continue to wield significant control over the USD-INR pair to keep volatility in check. He expects the pair to trade in a range of 82.60 to 83.60 over the medium term.
On the bonds, Vishal Goenka of IndiaBonds.com says sharp moves on Friday in the bond market was caused by a weakening INR in line with the other Asian currencies. He expects bond yields to be range-bound given it's a short 3-day trading week with no significant economic data and financial year-end. Ad supply-demand dynamics will change from next week as borrowing resumes. He expects the 10-year benchmark bond yield to trade in a range of 7.07 to 7.12% today.
Well, we've got a lot of stock specific action to track for you. We'll get to that in just a bit in our special top 10 segment. For the time being, we'll look at the list that we're tracking for you. Life insurers, Lupin, Adani Ports, HAL, RBNL, Welspun Corp, and Vedanta. All of them are the ones that will be reacting to positive news flow. On the flip side, you have Mankind, JM Financial, and IIFL Finance that will be reacting to negative news flow.
Okay, so lots of stock talk coming up, but